Good morning, ladies and gentlemen. Yeah, well, it's a pleasure to be here, and also it's a pleasure to talk about the financial service industry. Even if you're not from this industry, probably you find some aspects interesting because at least you're a customer in this industry. And one of the hot topics are today the business model innovation in this industry. Just came from Frankfurt. And the situation is pretty much the same in Frankfurt, London, New York, and other places. The sky looks blue, but the sky isn't blue. It's pretty dark. Why is this the case? We have a hard situation in banking, and it's just starting. We have low interest rates, low margins, earnings are vanishing. Also, regulation is becoming harder and harder. That needs more capital for the banks, which they do not have. And also the customer preferences, our preferences are changing all the time. We want to do everything, of course, by phone, by branch, by whatever you think about, at no costs. So plus, there are a number of new competitors, intruders, who also want to have a share in the banking and insurance markets. They are partly quite aggressive. They are so-called fintechs, which are relatively small companies in the financial service area based on modern technology, fintechs. Also internet companies like Google, Apple, and so on, plus telecommunication companies such as Telefonica, for instance, from Spain, also aggressive in this market. So it's not really a nice situation. So what bank managers would think about? Oh, our earnings are threaded, they are diminishing. That means it's not only the earnings, but it's also the business model. So we have to change the business model. Unfortunately, in the banks, they do not have a process to change the business model. They do not have a clue. They do not have any experience in this field because they never had to think about the business model. It was always a bank, balance sheet, certain earnings, certain costs, very, very clear, well, traditional model. So this is true for all the big ships in this market and not all only there. It's also true for other industries such as consulting, for instance, IBM as well, for all the big ships in the world. So the research question is, how can financial services companies get to a new business model, and how would the process look like? Well, let's start with the background. So we looked at the literature in many areas and found that it could be a good starting point to look at startup companies because they have a number of requirements, and the two most important ones are that they have to start from scratch. So really from scratch, and they have to be very fast. These are requirements you wouldn't find in the banks up to now. They are not fast, and they didn't start from scratch. So we looked at what approaches are available, and there are mainly two approaches. One is called design thinking, which is used in many areas meanwhile. You can use it also for developing new products, but also for developing new business models. And there's another one which came into the literature recently. It's called lean startup. Every entrepreneur in the world, starting with a startup company, knows about this book from Eric Ries on lean startup. So why not use these approaches in the big ships? So you see both approaches here. You can compare them a little bit. They are different. But there are also some similarities. I have to look for the pointer. Yeah. Okay. You see, lean startup starts a little bit later because the assumption here is that there is an idea already available, an opportunity which Ries calls the business idea. This is not necessarily the case in design thinking. Here we start even earlier in thinking about, what could a customer use or think or whatever, what could this customer help in any way? What is the surrounding of the customer? Anyway, then something follows which comes, which should create some sort of solution, and both of them have a component with execution. So some similarities as well. So for developing a procedure for banks or insurance companies, we used a method. The method is called design science research. I guess most of you have heard about this, very popular in business informatics, where they want to develop something. It's called an artifact there, or we call this a process or a procedure here. So it's very similar, so we can use the steps. You don't have to read them. So because it's always starting with the motivation, identification of the problem, finding the goal definition, then the construction, which is the most important part of my point of view, demonstration of the solution, evaluation, and communication. So this is, the standard methodology. So based on this methodology, we thought, okay, what are the requirements for such a procedure to help these companies? Well, first of all, you have to cover the whole process an entrepreneur goes through, which is pretty difficult if you think of a large bank comprising 30, 50,000 employees. So, but anyway, we have to transfer these ideas from startups to the big companies. So then, of course, the process should allow very new ideas, make it possible to think of new approaches, innovative approaches, which is also a very hard requirement and which is quite new for many, many companies. So, and then it should be a process which doesn't need much time because we have to be very fast. As soon as we have an idea, like a startup company, we have to really proceed to get to the market. Get to the market with a product which is not necessarily 100% perfect. Maybe only 80%. You know this from software products. They usually are not 100% perfect. So, and should need not too much capital and knowledge and so on. So the basic structure is consists of two parts. One, which is very, very important, I think, and different to other approaches, is this one, the customer-centric output conception. Sounds pretty complicated, but it isn't really. So because we should have the customer in mind as a starting point, always start with the customer in mind, because this is the only reason why a company exists. Without a customer, we do not need the organization. This is not always clear to every employee in large organizations. Yeah. So, and then the second one is a market operations revenue model. This is, well, pretty wide known. Everybody who deals with business models, well, knows about that. We have to set up a operations and revenue model. So let's have a quick look at the first part. Don't worry, it's, if you are interested, I will provide you with the slides, or you can read this in this open access journal. So, but what is interesting here is that we start with a strategy. This is still very classical, and then get into the transformation phase. So, and here we start with mostly steps which come from design thinking, because we couldn't use lean startup strategy here, because they start a bit too late. We do not have already a business idea. We start from scratch. So we have to think, oh, what are the customer needs in a very, very wide scope. So start here, well, based on a design brief, which is kind of a framework, a short description on the environment, and then start with discovery. So discovery, say, what could we do, collection, qualitative, quantitative data on consumers. And for this, design thinking offers a number of interesting starting points called personas, for instance, or a so-called customer experience matrix, which is not known in other approaches to develop new ideas. So, and then we go on with the customer insight, definition, and try to generate as many ideas as possible. So very important is that we have a very broad scope of looking at the possible needs of the customers. So and then there's the first decision gate where we look at suitable solutions in terms of technical feasibility and so on. So then we would proceed to the second phase. The second phase is mostly based on lean startup, because now we can use the core idea of Ries. And he says, the core idea is always to build up ideas, then measure based on certain hypotheses whether certain ideas would work, and then learn. Learn could also mean to throw away the idea and to start again. So and therefore you find some backward arrows which go back here, for instance, to start again. So this is part of the game, of course. It's not something bankers or insurance guys would like. So they are always very strict and they want to produce everything 100% perfect. And there's a certain reason behind, because we have regulation. We have regulation which is very, very hard. And regulators do not like MVPs, which are most viable products. They like 100% products. So there's a trade-off for the banks or insurance companies. So what can we risk? How can we get to a market with a product or with a service which is probably not 100% perfect? So anyway, we go through these steps: creation, the ideas, to complete the ideas, validation. Of course, this is highly important, the validation phase, because again, we can go back here, elaboration on our idea, then getting to the business plan. Many people jump to the business plan and skip all the steps before. That's not a good idea. And then later implementation here, and then we can decide, next step would be to get to the process level, to define the business processes, or maybe to sell our great idea to others, maybe to startup companies or to other companies which are already busy in this field. So this, just a quick view on this. What we did afterwards, we conducted an evaluation based on expert interviews. These interviews have been conducted in a large German bank. It's number 4 right now, the largest banks in terms of branches in Germany. And the interviews have been based on the criteria delivered by Design Science Research. So the result was that the experts confirmed pretty much the procedure, said, oh yeah, we could use this in the bank. They made 2 reservations. Well, we could talk about this in the discussion section if you like. One is, have this in mind, the customer centricity. They say, it's very important. Yeah, but maybe there are also other impulses like technology push, which also could bring the bank to a new business model. Well, could discuss this. And there might be other approaches like design thinking and lean startup. Well, can think about this. Well, there are some limitations as always. One is, of course, our expert interviews have been limited to 1 bank. Could be different in other banks. 6 interviews, well, also in-depth interviews, but might be not enough. Also limited to 1 country, of course, in this case, and it's a theoretical evaluation based on interviews. So the next step could be to use the procedure really in a bank and see how it works. We are very confident that it would work, but anyway, still it's theoretical. As a result, would say, yes, well, certainly we can use a starter strategy. In my point of view, the banks and insurance companies have to use these strategies, otherwise they will lose, and otherwise they will not get in innovations, and then they will be still big ships, but they will lose. They will lose against internet companies, which are much more faster, flexible, and they will lose again the fintechs as well. So it's not a good situation if they stick to their old methods. There might be challenges in terms of mentality in the financial service industry, in terms of managers. and the regulation, as I mentioned already. So what is a good thing here is that the business model innovation is based on a so-called market pull, which means the customer centricity is the starting point of everything. So we call this the outside-in view. We are outside looking from the customer perspective, so and then creating something. Today the thinking is vice versa, inside out, sticking in your borders, thinking borders. So as a final remark, well, from our point of view, this is a quite creative tool for inventing business models, and this is one of the major tasks the top management in the financial service industries have today. Thank you very much.